right, welcome guys. This is a long awaited Forex strategy video that you guys have pretty much been begging me to put out for you guys. So today we're going to go a little bit more in detail, get into the technical stuff. The execution is honestly really easy once you understand how to lay everything out. So we won't go over much execution because that's for you guys to backtest on your own. So we'll just lay this out, how you can execute it, how you can take the trade, and then we'll also go over some other things that can, potentially give you higher risk to reward, higher win rate after you learn the step-by-step execution, okay? So to start off, okay, these are just some technical things that you need to know and understand about the strategy, okay? One, we are playing off of session opens and closes, okay? So this is Forex, okay? This is not options. This is not futures. We are not talking about the S&P 500 right now. So if you don't trade the S&P, I'm sorry, maybe you should look into this, because the S&P has not been trading great the past really month, and I've been killing it on Forex instead. Just because I can switch over to the markets, So with that being said, let's get into the technical stuff. You have to know when sessions open, okay, because that's what we're playing off of. We're playing off of new money coming into the market, okay, and reactions off of previous sessions highs and lows, okay? So this strategy was actually made by me, but it's based off of a Forex theory that sessions tend to respect previous sessions highs and lows. So if we're going from London session into New York session, if New York goes into the London session low, odds are it will respect it and go in the other direction. Same thing to the upside, right? If London makes a high and that's the high for that session and New York comes up into it, obviously we have to see more confirmation, and we'll get into that later about break of structure, how to enter. But when we see that high get violated and then we see a reaction off of it, a break of structure, that's when we can execute the trade and actually take action. So this was literally made by me, just based off of that Forex theory. It kind of combines sort of like the liquidity sweep aspect where we're marking out the highs and lows, but it's a little bit different, okay? Still super similar to how I usually trade the S&P 500, but now we're getting into it with Forex pairs, and this is the strategy that I turned profitable with. And honestly, I think I turned profitable with it, and I think I do so well with it because I made it myself. Nobody else can claim this. I made this myself, okay? So I'm proud of myself for that. This is the strategy that turned me profitable. This is the strategy that helped me run up a bunch of bread with these prop firms. Overall, it's great, all right? So let's get into it. Let's start off with the technical stuff. The first thing that you're going to do, this is just for me. You can do it however else you would like. But like I said, we do have to understand when these sessions open, when each session opens. There's London session, New York session, and Asian session. Okay. You can either do a quick little Google search and whatever time frame you have set on here, let's say you have it to New York time because you just love ICT and he always says to keep your thing on New York time. I don't do that personally because the person that taught me when each session opens, he was from London, and I just remembered those numbers. Anytime I switched the time zone, it messed with me. So it just makes it super easy and simple for me to keep it at London session, and the numbers just stay the same. So boom, mine is set to London session. You can either, change yours over to London like me, or you can leave it on New York, and then you'll just have to do a Google search or just figure out the difference. Okay, so mine is set to London though. And then from there, you have to know when each session opens, okay? We don't really necessarily care about the close because London, if you guys know, closes a little bit into New York session. So we don't really care about when London session closes. We care about when New York session opens because all of the money from New York is going to enter the market then. So that's what we care about, the new money coming into the market, okay? And I guess reacting and acting off of previous market opens and the money that was put into there, right, to make market go in whatever direction they want. So The numbers that you are going to need to remember are actually pretty easy, okay? It's 0, 0. That is the start of Asian session, okay? That is Asian session open, 0, 0, okay? There's a couple hours before it. I think there's 2 hours. 1 hour before it, I believe, is spread hour. So I think that is 22. So 22 is spread hour, where New York has closed and there is no market open. And then the hour before this is going to be Asian session pre-market. Okay, so you're probably saying, well, TJR, you're stupid. New York session actually ends at 22 hours, not at 0. Again, we're doing this based off of market opens, not pre-market, not off market closures. Okay, we need to remember that. It's off new money coming into the market. Okay, so Asian session opens at 0, 0. London session opens at 8, 0, 0. And a New York session opens at 1300. Okay, this is New York sessions pre-market, and the reason why I don't set it over to 1430, which is when New York Stock Exchange opens, is because New York pre-market starts at 1300, and these Forex pairs sometimes can get a start earlier than the S&P 500, similar to today, like the gold trade that we took, which we will cover, and I'll actually leave a little snippet for you guys at the end of me live setting up all my stuff that all the trades and stuff that we took this morning. And if you want to watch the full video of me taking the trades this morning, literally just go to the video that was just posted right before this. It goes over the gold trade that we took and the GJ trade that we took. We lost on GJ, we won on gold, and I'll cover the gold trade again in this video. So technicals, set your trading view to time zone to London, and then remember these numbers. Asian session, 0, 0. London session, 8. New York session, 1300. Cool? Cool. All right. So from there, now that we have these labeled out, and before we even get in the chart, we need to understand, what are we looking for? Okay, so let's say this is what Asian session does. Okay, it probably wouldn't make that many market movements, but boom, this is what Asian session does. Okay, it makes a high right up here, and it makes a low right here. Right here is when London session's money comes into the market, okay? So what will London session traders try and do to the previous Asian session traders who were having their way with the market, right? London session traders are going to try and move the market where they want to. How are they going to be able to do that? How will they be able to fill those orders? Liquidity. That's right, everyone. We're back on liquidity, okay? So when London session opens, okay, what is their first initial job? London session is the shortest session out of all of these. I can put the end of New York over here. Boom. I'll just set that as the end. Usually I don't do the end of New York. I just set it all the way over to Asian session. Boom. There we go. Okay, so London session is actually the shortest, okay, session out of all of them. So right when London session opens, what are they going to try and do? They want market to go in whatever direction that they are going to push it. And how are they going to be able to fill those orders in order to move the market? By taking out liquidity. Boom, either taking out the Asian session lows, taking out all of the Asian sessions traders from the market so they can move it in whatever direction they want. Same thing, potentially to the upside, right? They see, oh, Asian session traders probably have their stops, probably have buy stops above here. What are we going to do? Boom, initiate that. Boom, write it down. Okay, simple as that. Very similar to how we trade the S&P 500, just session to session now. And the nice thing about this is you can trade this New York session, you can trade this Asian session, and you can trade this London session. So if you are on another side of the country, if you're on another side of the world, if your time zones are messed up, if you have trouble trading the S&P 500, I highly encourage you to test this out, see how it goes for you, because Forex actually moves slower and cleaner than the S&P 500. The reason why I switched over to the S&P 500 in the first place was because I was only trading GBP JPY, this pair, during London session, okay, which is in the middle of the night for me. So one, I was getting terrible sleep if I ever got any, and two, I had no social life because of it, because I was literally up at night and asleep during the day. So I wanted to make a switch over to a time that worked better for me, and that's what the S&P gave me. But here we are back again, trading Forex during London and Asian sessions. So, comes back around. Anyways, let's get back into it, right? We're looking for session highs and lows. So boom, Asian session does that. Let's say London session, boom, takes out this high, comes down, takes out this low, goes lower, lower, whatever. Okay, now New York session is open. Okay, we have, boom, this London session high. Let's say London made like a low right here. Okay, and then New York comes into play, right? New York is going to want to do the same thing, right? Either target the low that it made, okay, either target this low, take it back up, or open, target this high, take it back down, okay? Again, these sessions are competing with each other to be able to fill their orders, to be able to move the market in whatever direction they want it to go, right? Because they are the new money coming into the market. How are they going to be able to move the market? By taking out the previous money that was in the market in the first place. Cool, cool. Now we got the logistics down. Now let's talk about execution, how we can actually find these highs and lows within the market, how to enter, and then we'll give one or two examples of it, and then I'll also leave that little snippet from this morning, and we can go from there. So we'll start off with, actually, I don't want to start with that one. We'll start off with a different one. Okay, we're literally just going to go, close my eyes, drag this all the way over here. Cool, where even is price? All the way down here, lit. Okay, here we go. We're going to mark out the sessions, okay? Boom, we have London. We have New York. We have Asian persuasion. Asian persuasion again. Okay, this looks good enough for me for now. Okay, so to start, all right, this is the first session that we have. We have Asian session going into London session. So Asian session, right, what are we looking for? We're looking for the highs and lows that it made. Okay, so where's the high? The high is right here. Most of the time, we would just mark it with a simple little ray, right? A simple line, put it on the top. However, this is the one thing that's different from this to the S&P 500. What I like to do, and I don't know why I did this, it's just stuck. Don't ask me the reasoning behind it. It's just, this is just how I like to market. It looks better. I don't know. This is how I made it up. Okay. So when I mark out the highs, I like to draw it on the 30-minute time frame from the start of the bodies all the way up to the top of the wick. Okay. That is how I label the highs of a session. Okay. Same thing with the lows, right? Right here, we have the lows of the session, boom, to the wick, just like that. Cool, cool. Okay, so we marked out Asian sessions high, Asian sessions low. From there, right, once you do that, where are we at? We gotta go all the way over here, huh? From there, right, let's say, boom, London session opens. Okay, we've marked out the highs, we marked out the lows. Once those highs and lows are marked, right, you can just, or sorry, once London session opens or is pretty much near opening, you can have a good idea of where the highs and lows are going to be. So mark them out. London session opens. Okay, once these areas get interacted with or get hit, okay, that's when we're going to scale down to the 5-minute time frame from the 30-minute down to the 5-minute time frame, and all we're waiting for is these levels to get hit, and then we're waiting for a break of structure. Simple as that. So look at this, right? Right when London session opens, we take out these lows, and then we break structure to the upside. Simple as that. Long, stop, underneath those lows, okay? Target previous session highs. Simple as that. Okay, you can also add other take profits. I usually like to set the first one to previous session highs, and if the previous session high is a bit too far, or if it's counter trend, then you can try and find something, in between, like a fair value gap, an order block, equilibrium, whatever else, right? We have highs up here that you could use as like a second take profit. That's honestly pretty high. I would probably want to target, I don't know. I would find something like put that there. I don't even know. That was just a guess. I just randomly put that there. But as you can see, right, this was the first example. Literally the first session that we marked out, the first one that we set up, hits take profit, right? Hits all of them, actually. So as you can see, right, London sessions waste no time, takes out the liquidity formation session, rallies, takes out these highs, we get a quick little sell-off, and then rally higher, okay? It's literally as simple as that, okay? Let's move over to the next session. Go back to the 30-minute. Okay, we'll go over here now. Okay, here we go. We have, what is this? London session. Okay, we have these London session highs. We can get this on the body. Is this not gonna want to move? My thing's glitching. My computer, even though I literally just got this, is slowing down because of all this information, or all the stuff that I'm trying to do on it. So I'm excited for when I get a PC. Okay, so we have those London session highs, and then these are actually the London lows, if you can't tell, right? We come down, and then this candle is the start of London session. So we can go ahead and mark out the London session lows as well. Okay, cool. Now let's go into the 5-minute. Again, I don't want to get too caught up in the execution of things, because it's pretty simple. Okay, so here, this actually looks like it probably would have been a loss if we had taken this. So right here, we have London session highs. Boom, market opens, New York session opens. Okay, we get a push up into the high. That's exactly what we would want, a break of structure. Oh, I literally think I took this trade. A break of structure to the downside. Okay, right here, stop above the high. Oops. Stop above the high. This is just an unfortunate example of, again, remember, this is counter trend, right? If we just zoom out on a high time frame, what are we doing? Boom, higher highs, higher lows, we're rallying, right? So we'll get into this at the end when it comes into intuition and just being smart about it. If it doesn't go with your bias, why are you taking the trade? You know, like, let's use our brain, let's understand where market wants to go, and then, you know, take a trade based off of that, not just, oh, the strategy says this, we're going to do that. Okay, anyways, so that would have been a loss, but still, execution, the exact same. You go on the 30-minute, you mark out those highs, you mark out those lows, and then you're good to go. Okay, let's see if we can get another London session in here. So this, it doesn't even look like it offered anything. We have boom, Asian session high, or we'll see where New York went. Again, nothing. Sometimes these sessions won't even give you anything, and that's another thing with just being patient, right? I'm going to encourage you guys to do this on just one pair for now. Choose one pair, whether it be GBP, JPY, gold. Gold actually moves extremely well with this. So maybe that's the first one you want to try. GBP USD, Euro USD, AUD USD, any of those really work fine. But again, right, we have the highs right here. The only low that we had was right here, and we see that instantly just gets ripped through. Okay, so if we move far past, oh man, I shouldn't have switched time frames. But if we move far past a low and then it like finally, like it ends up just like, you know, finally breaking structure to the upside, like that's not something we want to take, right? If it's far from our box, we want to see a reaction off of the box. So this is the low that it made, right? We get a quick little rip right before London session opens. London session opens, we come back down into these lows that it made, and we don't see a break of structure until all the way down here. Is that a reaction off of the low? Definitely not, right? So that's intuition, just being a good trader, understanding that, hey, we're way past this area of accumulation. Whatever this low was supposed to provide us, it didn't give it to us, right? Down here, it's not doing that, right? It would have had to be reacting off of it, or at least closer to it. Okay. Let's actually go over to GU and do some setups here as well. Sorry if you hear my psycho dog. Okay, so let's see, does this even give us anything? I literally even remember this, and I remember not wanting to take this off of this low. So let's keep pushing. I want to find more like entries for you guys, so you can kind of see how you should execute. Oh, well, this is actually decent. Okay, so we have New York highs right here. Okay, we see Asian session rally right into them. Ah, man. Well, I guess this isn't that great of an example. Okay. Again, this would have been a losing trade, but still something to learn from this. So here, right, just showing the reactions off of these areas. Here we get Asian session, rally up into these New York highs. We get a break of structure. Honestly, you honestly could have hit at least one take profit on this, because you're entering right here. Your stop is above these highs. So for a 1-to-1, right, you're hitting a 1-to-1 no matter what, right? You're entering on the close of this candle below this. So, I mean, and that's even being, generous. You could even move it even lower and still go for a 1-to-1 and hit a take profit on that. But again, right, we push into these highs, we break structure to the downside. And again, if we look at where market is going, if we just zoom out, it's going up. So ideally, you would want to be looking for longs, not shorts, within this market condition. Okay, but still, you would be able to catch something just off of that, even if it's a 1-to-1 risk reward. Whatever you want to target on this. If we scale back to like a higher time frame, we can see what you possibly could have targeted. Literally just target the top of these highs. Just like that, right? That could be your first take profit because of how small that stop loss is. But again, we're going to get into the intuition and being just like a smart trader, and why you wouldn't even want to take that in the first place. Right? A lot of people, I think a lot of trading is really just based on market experience, just time between you and the charts. Because, like, I'm able to see that and be like, I probably wouldn't take that just based off of market conditions. It's Asian session. It's late into Asian session. I probably wouldn't even be looking at market then, because most of the time we want it to happen right when market opens, right? Within the first 2 hours at least. And then it's like, whatever, I'll go home if I don't see anything. But yeah, we'll get into all of that later. So let's put this one here. Let's see if we can just scroll on back and go over here. Find another example for you guys. Literally just marking random sessions. Let's see if this day gave us anything. Wait, I took this trade. Lovely. Okay, cool. So right here we have, boom, Asian session highs right here. Okay, where's the low? Right here. We get a move down, then a move up. I'm not counting this candle, right? We have to imagine that that candle's not even there. So if we just do this, that candle's gone. What is this? This is a low, right? Move down, move up. Okay. Right here's the low, but I mean, really, you can highlight it just from here, right? This is the low that, what session is this? Asian session made. Okay. Go here. Okay. We can do this on bar replay too. All right. So we make the low of Asian session. Okay. We can go ahead and play this. It's probably going to go fast. Okay. London session opens. Okay. Again, we're already engaging with this low. We end up sweeping it, right? We take it out. Okay. So now what are we doing? We're monitoring the highs. We're waiting for a break of structure to the upside. Okay. So we have boom, high right here that we're waiting to get broken. Okay. Nothing. Again, we come down, engage with this low again, sweep more liquidity. Okay. Now our high is right here. We actually end up breaking structure with this candle. If I can get that on the wicks, end up breaking structure with this candle. You can go ahead and go long off of that. Stops right under here. Okay. Boom. You could even put it lower if you want. Okay. And then we have boom, targeting these highs up here. Let's see where this goes here. Actually, we're going to make this like 2 pips lower because you always got to account for that spread. Okay. We'll play it. We'll see where it wants to go. Okay. Market rallies, takes out our first take profit, just like that. Yeah, maybe you're stuck in a little bit of drawdown for a little bit, but boom, take profits hit. Okay, next target could be this high all the way up here. Play that, see if it ends up getting there before the next market close. Probably not. See if we get stopped out at break even. Okay, now something to keep in mind, right? We're just gonna lead us through this, right? So we can get rid of this. Now we've made, boom. Now we've made these lows. Okay, so now we have London session lows, London session highs, and we still have this trade running for potentially more profit. Okay, while New York is getting into play. Okay, so we have this high that we can target. Okay, we also have to take note of this high up here. Okay, because again, we're still active in this trade, but we could potentially, again, if these highs hold and give us a break of structure, we could potentially go short and just cut that long. Okay, so we'll play it some more. Okay, so we get boom, pushes up into there. What are we doing? We're tracking the lows. We're looking for a break of structure. So we'll play this more. Okay, boom. We do get a break of structure right here. Okay, so at that point, I would just cut this long. Goodbye. Okay, and then from there, you can either run a short position right here, stop right above here, or you can put it above these highs. Doesn't really matter. Okay, target here. See, maybe you could target here as the first take profit. It's a pretty bad risk reward ratio. You could honestly just target the base of this old previous low as your first one though. This isn't necessarily a trade that I would like to take, because if you're looking at the market, chop, it's kind of bouncing back and forth, but we'll just say that we entered for the video's sake. So we'll play this, see where it wants to go. Okay, again, ends up pushing higher, taking out that final high that we wanted it to hit in the first place. Okay, so from there we can see what it wants to do, and let's just keep doing this. All right, what's good? Sorry, I'm taking you away from the main strategy video, but I I think this will be really beneficial. This is literally me trading in the morning. I just woke up, so hopefully this can help you guys kind of visualize like live in action what I'm looking for. So I'm not even looking for a trade yet. Like I said, just woke up. I'm on the charts. I'm marking out my stuff. So this is what I've done so far. I marked out this Asian session low prior to London session. Okay, and then we have these London sessions highs, which are pretty much equal with the Asian session highs, so I don't necessarily have to draw another box on there. And then we also have these New York highs over here for GBP, JPY, and right now it does look like price is attracting into the previous London highs, potentially even taking out these Asian highs and these New York highs. So that's what I'm looking at right now on this chart. And then let's just go ahead and move over to GBP USD, mark out our areas on that as well, just so I can give you guys like a kind of idea of what I do right when I start plotting out these levels. So boom, again, we have a London session high right up in here. And again, sometimes your areas won't get hit, or you just know, you can look at it like the highs and the lows are too far spread apart. Okay, so we have this Asian session low, this London high. Boom. Here we go. Okay, boom. Just like that. We got Asian session low. We don't really have a London session low within here that we can put down. Yeah, there's not much. This would have been it, but we're already past that. So, and then on here we don't necessarily have a London low either. It would have been these, but this is a bit too close to where New York opened, and I actually think, yeah, I don't really like this. Yes, this is considered a break of structure, but look, right, this high is right there, right? This is one of those instances where we can avoid taking a bad trade just by using our intuition, right? Using your brain. Okay, next up we have gold. Honestly, the best looking one so far has been GJ. So we have gold right here. So, here we go. We actually just dipped into these Asian session lows right here. Let's see how it's looking off this. Okay, cool. So right here, we took out these Asian session lows. Okay, we have this high all the way up here. Go ahead and mark out these London session highs. See, this one, it's interesting because you don't know if you would, this is when high time frame comes into play because, right, we have this big wick to the upside. We don't necessarily know if this was a full test of this. I don't think it was because it never really reached the actual high. Got up pretty high, but it didn't get to the actual high. So I'll probably just be waiting for a break of structure within here because we did actually take out this low, right? There was no liquidity swept up here. There was down here, giving me more of a higher probability that this thing will go higher. And we can also try and use, higher time frame for confluence. We've yet to take out this low. So that's just something to keep in mind. You can even draw a line there if you're worried about it. Boom, and that's how I would set it up. So ideally, this is the trade that we would want to take. This, oh man, brutal. Yeah, but this is the trade that we would want to take. You push up into these highs, or, if price just wants to dump all the way down here, if price gets in here, then we'll be looking for longs. Okay. And it honestly looks like GU is going to draw right into this area for us. So GU now looks pretty good as well. Yeah. So yeah, that was just like a quick little overview of how to mark out your boxes, how to set them up. Hopefully that helped you guys. I need to go talk to the Discord now to actually get going with our trades. And if we end up taking a forex trade today, which we might, um, I'll make sure to include it in this video so you guys can see me trading it live. Hopefully give you guys a better understanding of what I'm looking for. All right. I'll see you guys in maybe the next clip. Who knows? Okay, so now let's talk about that gold trade that we ended up taking this morning that made us a lot of money. So this is how we did it. The something that I never mentioned was that you can actually take shorts off of lows and even longs off of highs. So the theory that I was talking about at the very beginning just talks about how sessions, right, they respect the highs and lows of previous sessions. So that means they respect it either way. Whether liquidity is taken out or not, that's not our focus, right? We're just focusing on the session highs and lows. So with this one, right, we see a full push up into this session low. We also take out this high right here, fill some of this imbalance, fill most of this imbalance, take out all these people from that were shorting within here during Asian session, or sorry, during London session. And then boom, we break structure to the downside, enter on this candle, stop either above this high right here, which was kind of risky, or stop all the way above this high up here, which is a little bit more safe. Okay, we can see then, right, first take profit was the ultimate low over here, this Asian session low. We see, boom, that gets hit. Second take profit was based on the hourly chart. Yep, this hourly low. We had another hourly low right here, and then we also had another super long-term take profit all the way over here that ended up getting hit as well. So yeah, hopefully you guys learned a thing or two from this video. Again, I'm going to continue using this, and I'm going to, keep trading this way until it does me dirty. Because the S&P hasn't really been moving too clean. Like, what is this? What's this price action, you guys? Like, come on. Like, no one wants to trade all these wicks. Nobody wants to trade those wicks. Do you? I don't. So that's why I've been trading Forex a lot more, and it's just moving a lot cleaner. Like, look at this. Boom. Perfect tap into it. Break of structure on the 5-minute rally. Like, it's super simple. So hopefully that video was able to cover the majority of your questions with this. Again, this thing works very well. Oh, I forgot. Before I finish, let's cover some of the intuition things and some small things that could, help your risk reward, and help your win rate. And we talked about it throughout the video, but it's pretty much just understanding your pair, understanding how the market moves, understanding not to go against the market's bias, right? If you just look at the high time frame, right? This was perfect for us for a short. Why? Boom. We're making higher highs, higher lows. Boom. This is literally, a lower highs and lower lows, right? We made this high. We made a lower one. We didn't necessarily break these, but you could tell. I mean, I could tell that we were, just due to market experience. But again, trade with your bias. If this gives you a setup that's against your bias, double check, make sure you're sure that you want to take it. Maybe bring your take profits a bit closer, maybe secure more partials. It's all just like the little things, and those little things will come over time. As you make small little mistakes, you're like, I shouldn't have done that. I shouldn't have taken that trade. All those things are little lessons that you can start adding and adding, as long as you don't make those mistakes again, right? Make a mistake once, learn from it, and then from there, you will be just fine. Again, this won't make you rich in a day. It won't make you rich in 2 days. It won't make you rich in a month. Just practice this, become disciplined with it, do it correctly, learn from your mistakes, learn those lessons that the market teaches you, and then this thing should just be a money printer for you. So hopefully you guys learned something from this. That is it for me. I will catch you guys in the next one. Peace out, baby.